After working with dozens of investors and analyzing hundreds and hundreds of projects, I see the same patterns and similar mistakes again and again. And personally, if I had to start over as a property investor, I do a lot of things differently. In real estate investing, small mistakes compound over time and often turn profitable deals into disappointing ones. This video isn't about finding the perfect property and hoping to buy at just the right moment. It's about thinking smarter, planning ahead, and building a strategy that actually works. Not just on paper, but in real numbers. So today, I'll walk you through 5 key mistakes you have to avoid when starting real estate investing. Welcome to our channel. I'm Artyom, real estate investor and co-founder of Inside Estate, your trusted partner in smart, well-informed investment decisions. If that sounds like the kind of approach you want for your investments, make sure to like this video and subscribe to the channel. Every week, we share real case studies, real numbers, and practical strategies for building passive income through real estate. Just a quick note, this video is for informational purposes only and does not constitute financial advice. Always do your own research and consult with a licensed advisor before making investment decisions. You hear me? Mistake number 1, buying based on emotions, not due diligence. One of the biggest mistakes even experienced investors sometimes make is buying based on emotions. It's especially tempting in places like Thailand, which is now one of the most popular destinations for international property investment. New beachfront projects, luxury villas with infinity pools, launch prices that seem too attractive to miss. It's easy to get caught up in the dream. When marketing materials promise high rental yields and fast appreciation. And yes, they do. Here's few examples of what emotional buying often ignores. Is the land fully owned and legally registered? How many projects has the developer successfully completed? What's the actual construction progress, not just what's promised in marketing brochure? Is there proven rental demand in that location or just optimistic projections? That's why at Inside Estate we evaluate projects not by marketing but by business fundamentals. What strong fundamentals examples actually look like? Let me show you a few examples. This is a beautiful project, the title Madeva. Currently under development by an experienced team with several completed projects in Phuket and dozens of projects across Thailand. It's just a short walk from famous Bang Tao beach, situated in an area with the real demand and having vast infrastructure to become a project of choice for many visitors. Or Laguna Lakelands, part of Phuket's most established resort community, offering world-class infrastructure, brand recognition, and consistent demand from both residents and tourists. Mistake number 2, chasing high returns without understanding the risks. Let's be honest, when you see a project promising 12, 15, or even 18% returns, your brain lights up. You start calculating how quickly you will double your money. You start planning vacations you haven't even earned yet. After emotional buying, the next common mistake is chasing the highest promised returns without properly assessing the risks. When you see projects advertising double-digit returns, but the question isn't just how much you can make, it's how realistic and sustainable those numbers actually are. Here's what chasing numbers often ignores. Is there actual rental demand or is it expected growth based on brochures? Are the management fees, void periods, and taxes factored into the ROI? Who is operating the property? An experienced hotel brand or a future management company that doesn't exist yet? And what's the plan if the guaranteed return ends in 3 years and the market softens? Anyone can promise 15% ROI. The question is, will the market support it or will you be left with empty promises and empty apartments? Let's take Laya project as an example. It's a fresh project in Bang Tao area, just a few minutes from the beach and Billionaire's Bay, one of the most premium areas in Phuket. The project offers a guaranteed rental income for 5 years. That's good news, right? But what really matters is what happens after those 5 years. Laya is managed by an international 5-star hotel brand, which means the rental quality and the service stay high. The location ensures consistent tourist demand, so there is a good chance your income will actually grow once the guaranteed income period comes to an end. It's not just about what you earn now, it's about owning something that keeps working for you long term. Mistake number 3, putting everything into one property. Mistake number 3 is one of the easiest traps to fall into, especially for first-time investors. Putting all your capital into one single property, one unit, one location, one strategy. It feels safer at first because it's simple. One purchase, one contract, one set of problems to manage. But in real estate, concentration creates risk, and diversification protects you. Let's be honest, few $100,000 is a huge amount of money. Not everyone has that kind of budget. And even if you do, it doesn't mean you should put it all into one expensive villa or one expensive sea view apartment. What we often see is people stretching their budget to buy something impressive, thinking it will pay off. But in reality, that one property comes with one rental model, one location, and one set of risks. If something goes wrong, you are fully exposed. Instead of going all in on something big, it often makes sense to start with something more affordable, like a $100,000 or $150,000 unit, and then grow your portfolio over time. That way, you stay flexible and spread your risk across different areas and strategies. The smarter way to invest is to build a small balanced portfolio across different markets and rental types. For example, Origin Lagoon. Great for long-term rentals, located in the very center of the developed area with strong infrastructure. Ideal for digital nomads or expats looking for extended stays. Then, the title Serenity. Perfect for seasonal rentals or longer stays. Steps from family-friendly Nayang Beach. Close to the airport, steady mid-term demand. Laya, positioned near Layang Beach. Managed by a 5-star hotel operator, ideal for a mixed model. Short-term during the tourist season, monthly rentals during the off-season. So, by spreading your investments across different rental models and areas, you protect yourself from seasonal swings, market shifts, and single point risks. That's how you build stable, predictable income, not just from one property, but from a system that works together. If you want to dive deeper into how passive income from real estate actually works, we made a full video about that. The link will be somewhere here, I think it's here, and in the description below. And if you are thinking about building a real estate portfolio, not just buying a random property and hoping it works, we can help. At Insight Estate, we build personalized investment scenarios based on your budget, your goals, and your risk profile. We'll show you how to spread your capital across different projects and strategies and calculate the projected ROI for each one. Just leave a request using the link in the description, and I'll assist you with the options that actually make sense for your goals and budget. Mistake number 4. No exit plan. Another mistake that's easy to overlook, not thinking about how you will eventually sell the property. Many investors focus only on rental income, but they forget, at some point, you may want to exit your investment. Oh hey, life happens, you may need to sell. And if your property is hard to resell, it can lock up your capital for much longer than you planned. The smarter way is to think about liquidity from the very beginning. Choose projects and locations that are easier to resell to the next wave of buyers, not just renters. Let's take some real examples in Laguna, a brand new master-planned community with villas, townhouses, and apartments. Perfect for future resale as the area expands and the infrastructure matures. Sky Park Laguna. Compact apartments with full access to Laguna's amenities. More affordable entry point, strong tourist demand, and potentially an easier resale to the next wave of investors or buyers looking for a second home. Angsana Ocean View Residences. Luxury beachfront units backed by the Banyan Tree brand. Premium positioning, limited supply, and brand strength drive future resale value even higher. When you buy into growing areas like Laguna, you are not just earning rental income, you are setting yourselves up for long-term capital gains and multiple exit opportunities when the timing is right. That's what smart property investing is about: control, flexibility, and growth. Mistake number 5 is trying to do it all solo. This is the biggest one. People trust the first agent they meet. They Google a few projects, maybe they visit a couple of properties, and then they buy. But you are not just buying real estate, you are locking in a 5 to 10-year outcome. You need real data, structure, and local insight. That's why we built Insight Estate as an investment-first platform. We evaluate dozens of projects every month across almost 200 parameters and score them across 4 dimensions: capital safety, yield potential, location, and quality of life. Then we filter down to the ones that actually fit your strategy. So let's recap. Understand fundamentals and don't buy based on emotions. Think about risks. Don't chase solely numbers. Build your portfolio step by step. Don't overstretch yourself and your cash flow. Understand your exit strategy. Don't focus only and purely on yields. And above all, be strategic. Don't do it without a system. If you'd like help building your own plan, we've prepared something for you. It's a free investor pack with ROI breakdowns, sample scenarios, and a simple framework you can use to start building your own passive income portfolio through real estate. Just hit the link in the description and leave a quick request. I'll personally send you a selection of top-notch properties with real numbers, not marketing promises. A free personal consultation goes without saying. Did I say that? Thanks for watching, and I'll see you in the next episode.